Thanks to the data, it is clear that we've finally reached the end of a booming housing market. We can all collectively acknowledge that your property is no longer going up 10 or 20% this year, yet that hardly by itself equates to a crash. So what we're all sitting around trying to figure out is, what does that mean in the face of so much uncertainty? In today's episode, we're going to figure that all out. In order to do that, we have to understand how we got here in the first place. Look, $6 trillion was spent by the federal government to stimulate everything and anything. Number two, they dropped interest rates to under 3%, which set the whole thing on fire. And last, we just had a feverish millennial demand that was already there, but was turned up because everyone all of a sudden was stuck in their homes. So that all created the perfect storm for just a rocket ship to take off. On the flip side, now that they've raised interest rates, wind down all that stimulus spending, it's understandable that we'd go through a cooling off period. We're entering a new season, but like every season, this season too will come to pass, and there's another one around the corner. So we're trying to figure out, is this season a crash or is this just a slowdown? In my view, we're simply seeing what is naturally a slowdown that will not last forever. And here's why. You hear so much about the markets and national headlines, and really that just means a collection of all the cities, all the towns in America thrown into one bucket, shaken up, and you get averages. And you decide that the markets have gone up or are going down, have cooled off. Yet in reality, some markets, thanks to COVID, took off like crazy. Austin, Texas, Nashville, Tennessee, Tampa, Florida. Cost of living was really inexpensive. Everyone could all of a sudden work from anywhere, and people just in droves flocked to these areas. And in those cases, markets like Austin went up 2, maybe even 3 times in value in a few-year period, which is nuts. What gets so hot, understandably on the back end, is going to get really cool. In the DC area, we just don't have those same issues. Frankly, if the markets went up 3 times, the average home price would be something like $1.8 million, which I assure you it is not. So our area operates a lot differently than some of these COVID boom markets that you hear so much about. Number 2, the DC area has a very stable, affluent population anchored by one of the strongest job markets in the world. You have tons of white-collar jobs with $150,000, $200,000 salaries, and that population set isn't getting smaller, it's increasing in size. And unless you believe that all of those $150,000 earners are set for renting the rest of their life, I think the resale markets have a pretty damn strong future in our area. There's also another problem. Within 30 miles of the district, there's no undeveloped land. So we have a space problem, a demand that's here with a supply that's always going to be way down here. So I wouldn't bet against that equation long term. When supply and demand are off kilter, whichever is in the least is going to win. And in our case, it is supply. We don't have enough good houses to meet the demands of a growing population. And last but not least, I've seen some really encouraging news as of late in the mortgage markets. There was an overcorrection. As inflation reports came out, the government turned up the heat on the rates as quickly as possible. In fact, they haven't done it like this in 40 plus years. The stock markets went nuts, and those investors started bailing from stocks and entering their money in a more stable bond market in order to just get some type of return, not lose money. Well, when the bond market is performing as strong as it is, it really affects the 10-year Treasury, which, at the expense of nerding out, the 10-year Treasury actually impacts your mortgage rate a lot more than the federal short-term interest rate. So as the bond market has gotten stronger and stronger and stronger as the year has progressed, we've seen mortgage interest rates get to become better deals. As we mentioned at the beginning of this video, good rates equal good markets, and we got up in that 6 plus, almost 7%, and we've seen about a 5.5% interest rate as of late. So if that trend continues to happen, this whole thing could be old news in a hurry. No one has a crystal ball, but there's a lot of positive indicators that if you get away from the headlines and the hype, you start looking at the facts and you say, long term, I think we're going to be okay. And in this area specifically, I have no doubt about it. If you're a buyer, what does this mean? Look, there are deals right now that were not available to you 3 and 6 months ago. Sellers are taking longer to sell properties. Often it's because they're overpriced in their home, but either way, you can find discouraged sellers that have stayed on the market for a month, 2 or 3, and are just tired of it, and are going to take a discount because of it. Timing the market has always been a fool's game, but I can see there's a window of opportunity here where you might be able to find the right property for the right price, and even if your mortgage interest rate is a little more expensive, that's going to be all right long term, because when the rates come down, there are going to be opportunities to refinance, and today you could also throw a few bucks at it and buy down your rate. So finding good deals right now is a little bit easier than it's been in quite a long time. Sellers, on the other hand, don't look back as to what could have been a few months ago with your price. That's torture. What you want to look at is today, your property is still worth nearly more than it's ever been worth. In other words, if the markets have adjusted 5%, you still saw a 25-30% increase in your property's value in the last 2 years. A few months of bad news doesn't erase all of that, by the way. So if it fits your timeline and it fits your needs, feel confident. Go out there and sell your property. Get it ready. Paint it if it needs painting. Stage it if it needs staging. Don't leave anything to chance. Get an aggressive marketing plan. Go out there with confidence because there are still buyers looking for a place like yours and your price has almost never been better. If you have any questions about all this, feel free to reach out. I'm happy to help and we'll talk again soon.